we're above $4,000 an ounce right now, and silver blasted through $50 an ounce. The
For
futures price,
silver, not for gold,
for
just
silver.
for silver.
So you got some backwardation. That seems like there's some trouble. So I want you to sniff out that or to elaborate on that for me.
Well, I think what might be happening, there's a lot of shorts that have historically been around the silver market. And to the extent that the shorts are trying to lean on the price, they're doing it in the futures market. So maybe the shorts are trying to push the price down by selling futures, but it's not working because there's so much physical demand right now for the actual commodity where the buyers can't wait till December.
Peter Schiff, Pacific Asset Management. Good afternoon to you, my friend. How are you?
I'm good. I'm good. How are you?
I'm doing great. Thank you so much for coming on board. I really appreciate it. Been looking forward to this for a little bit. So gold has blasted through $400. I mean $4,000.
4,000,
Yeah,
yeah.
right. We already, to all my viewers and listeners, Peter and I were talking a little bit before this dropped, and the number 400 came up. So I think that just confused me. But we're above $4,000 an ounce right now, and silver blasted through $50 an ounce. And it looks
Yeah, in
like
fact,
go ahead.
last night we got above 53.50. It's been a volatile 24 hours in silver because it got above 53 and a half, then it pulled back below 51. Now it's back almost at 52, so it's kind of roller coaster. But gold's been pretty solid. In fact, right now we're trading right at record highs. We're above 51.50. I think last night we got closer to 51.80, might have been the peak, but I'm sure we'll take that out, if not by the end of the day, certainly by the end of the week.
Yeah. Well, you know what's interesting to me? A couple of things are interesting to me because I'm getting a lot of phone calls and emails. I mean, literally from friends, and it makes me a little concerned actually because they're wanting more information on gold and silver, and they're wondering where we are at in this cycle or even in the world. So I want you
Yeah.
to address that. Another thing that's very interesting, this is a two-part question, is the spot price is actually lower, correct me if I'm wrong, than the futures price. No, the
For
futures price,
silver,
yeah,
not for gold,
for
just for
silver.
silver.
So you got some backwardization. That seems like there's some trouble. So I want you to sniff out that or to elaborate on that for me. Those two questions.
Yeah, well, normally, a futures contract would be above the spot for something like gold because if you don't have to pay for your gold for a few more months, there's a value of money, a time value. And so normally, if I don't have to pay for my gold till December, I get a loan for a couple of months. That means that gold is more expensive if I'm gonna keep my cash and not give the seller the money until December. But right now, you have a situation where buying silver today is more expensive than buying it for delivery in December. And that happens when there's a big demand for silver right now. People can't wait till December. They got to get it right now. And normally, I mean, I just assume I'll buy it in December, wait a couple of months. If I get it cheaper, it's the same thing. I'm not going to use it up. But it means there's some demand right now for physical. But also, I think what might be happening, there's a lot of shorts that have historically been around the silver market. And to the extent that the shorts are trying to lean on the price, they're doing it in the futures market. So maybe the shorts are trying to push the price down by selling futures, but it's not working because there's so much physical demand right now for the actual commodity where the buyers can't wait till December. And so I think that's really a sign that you're going to see some disruptions in the market. I think ultimately the shorts are losing control of this market. And I think what's going to happen is serious buyers who want silver but can wait a couple of months, what they're going to do is they're going to say, well, instead of buying silver now, I'll just buy futures contracts and I'll just take delivery in December. I don't need the silver. I'm not like going to, I'm not using it to make batteries or something. I just want it as an investment. So I'll just wait to get it a couple of months. That could cause a big problem because that could mean that a lot of people who are buying these future contracts are not going to just, close them out when the contract, comes up. They're going to send in a request for delivery. And that means the short, whoever's on the other side of that contract, is going to get notified by the exchange that they need to deliver a bar of silver, or how many bars, maybe a bunch of bars, depending how many contracts they're short, which means now that futures guy has got to go into the physical market and buy the silver, because he doesn't have it. I mean, unless he's he's a mine and was hedging. But most of the sellers in the futures contracts are just speculators betting the price is going to go down. They don't actually have the silver, but if they have to deliver it, they got to go out and buy it. And now that increases demand in the cash market, because now you have all these futures traders that need to buy silver. So look, this thing could explode. We could have a massive short covering rally. Because if you don't want to deliver, the only way out is to buy yourself out of your short. But of course, somebody's going to get stuck with the delivery notice, because everybody who has a futures contract has the right to take delivery.
Yeah. So the next question really is, who are the buyers that you see coming in? Is it still primarily central banks? Is it just primarily the Chinese and the foreign governments here? And are you seeing any retail coming into this space? Because you have a lot of big clients, but you also have a lot of clients, just, smaller retail clients. So what do you
Yeah.
see coming in the space?
Well, I mean, personally, we've seen an uptick in business, but I mean, nothing, spectacular. And of course, it's coming from a very low level. There hasn't been a lot of interest. The best year that we had at SchiffGold since I've owned it or been involved was 2020, was the COVID year. And so a lot of people were like rushing to buy gold and silver during COVID, especially the early days. But we've got nothing like that now. Even though from a price perspective, we've had a much bigger rally now. In fact, this is the biggest rally. We've had gold's up like 57% on the year. We haven't had a year this big since the 1970s. And there were several years in the 1970s where you had these big moves in gold, but we haven't had any since. And so you would imagine with, the best year since the 70s, we would be having a booming business, and we're not. And so that's a good sign that, this is still early. We haven't seen a big rush of retail buying, not even close. But yes, I think that if you, watch the news now, there is some more coverage of gold compared to no coverage at all. So now, gold being at 4,000 was like, oh, okay, now it's a topic of conversation. But, they're not talking about it nearly as much as they should. It's a much bigger story than they realize. They have no idea why gold is going up, what it, signifies, or, why people should be worried, about what this potentially means, that gold is at this price and going higher. So I think, there's not a lot of coverage to make me nervous that, oh, maybe it's too popular and I should sell. And I think as gold moves up a little bit more, 4,200, 4,300, they may not even talk about it again until it's at 5,000, right? Because it's not like the main thing that they're discussing. Maybe when it's 10,000, they'll start focusing on it more on a daily basis. But even now, whenever they mention gold, they can't help but, drag Bitcoin into the conversation. So gold doesn't even get like its own coverage. It has to share the spotlight every time with Bitcoin. So that'll change eventually as gold keeps going up and Bitcoin crashes, and the whole idea that it's digital gold, is exposed as a marketing gimmick.
Right.
But no, I think we're still early days for retail. And in fact, Wall Street is now finally waking up to gold after, all these years of outperformance relative to stocks. Finally, they're starting to say maybe our clients should have an exposure to gold. Morgan Stanley, I think the biggest example, saying the 60-40 portfolio should be 60-20-20, where your bond portfolio gets cut in half and you put the balance into gold. I think that is a major step in the right direction for Morgan Stanley. But it means a lot of buying is coming if, brokerage clients all around the country are going to be selling half their bonds and buying and buying gold.
Yeah. Two things on that. Imagine what interest rates would be on bonds if half of
Oh
the
yeah, this is bad. This is bad news for the U.S. government because foreign central banks are already
selling.
unloading treasuries. We have record deficits now to fund, and if foreigners aren't buying our bonds, and now Americans are selling our bonds too, who's going to buy them?
Right.
And obviously, it's going to be the Fed.
Right.
But if the Fed buys them, where are they going to get the money? Well, they have to print it,
They have to print.
which means higher inflation, which drives even more people into gold, right? And more
Right.
people to sell bonds. So eventually it becomes a self-perpetuating spiral where it may not end up being, it may be 60-40 again, only the 40 is gold and no bonds, right? Because
I'm not laughing at you. I'm just imagining that. You're right.
yeah,
No,
yeah,
that's a great point. I'm not laughing at
yeah,
what you just said, but it's
yeah.
just this is where we're at. Can you imagine that? No, we can.
Mm.
That's why we're talking about it. So I want to get to the miners in a second here, but I want to first ask you economically. You mentioned the 70s. Do you see this as a replay of the 1970s, if you would, on steroids, or
Yeah, you just took the words out of my mouth. I was going to say on steroids. Yeah, it's going to be similar to the 70s. And the similarity is that so in 1971, right, we got the 70s started by going off the gold standard.
right?
And that basically opened up the floodgates for us to print more money and have bigger deficits because we no longer, had gold to discipline us. Where we removed those shackles, right? So the government was free to be more reckless. And so the dollar lost a lot of value in the 70s as a result. That's why oil prices went from $3 a barrel to $40 a barrel.
Mhm.
We tried to blame it on the OPEC, right? You guys are screwing us over, jacking up the oil price. But it was America that tried to screw over OPEC by paying them in paper instead of gold. So when
Mhm.
we were giving them gold for their oil, we could get it for $3 a barrel. But when we wanted to give them fiat, it was $40 a barrel, right? It's not their fault that we tried to screw them over, but everything got more expensive. The dollar lost a lot of value. It
Mhm.
was a big deal. In fact, the reason that so many women were working in the 80s and not in the 60s was because they had to get jobs in the 70s because their
Mhm.
husbands' paychecks lost so much value because of all the money we printed that they couldn't pay the bills.
Mhm.
So I think what's going to be similar about what we're about to experience is the second half of this. So when we went off the gold standard, the world never went off the dollar standard. They stayed with the dollar. They just marked it down, but they kept
Mhm.
using it. Now
Mhm.
they're going to, mark it out. I think now the world is going to say, okay, we're going off the dollar standard now. We should have done it 50 years ago, but we're going to do it now.
Mhm.
And and so that means that all these foreign central banks that have been holding dollars convert them into gold.
Mhm.
And um, it also means that countries are no longer looking to accumulate trade surpluses with the United States in order to earn dollars. And if the world doesn't need dollars anymore, well, they don't need to buy our treasury bonds. They don't need to buy our mortgage backed securities. And we're kind of on our own. And
Mhm.
so that means that we're going to be staring at much higher prices for consumer goods because we're not going to get all these goods coming in from the rest of the world. It means we're looking at much higher interest rates because if we want to borrow money, we're not going to get it from the rest of the world. We're going to have to borrow it from other Americans, and most of us are broke. We're
Mhm.
all borrowing. We can't borrow from each other. We need to borrow from China because
Right.
they're the ones that save half their income. Americans spend all their income and then some.
Right.
There's nothing left over. So look, this could be a rude awakening, but I think the dollar is going to see an even bigger decline now than during the 70s. I don't know how long it's going to take, but it was about a 2/3 decline. But I think the gold price could have a similar trajectory. Gold went from 35 to 850.
Yeah.
Do the math on that percentage gain.
Yeah.
But I mean, we're just getting started at $4,000 gold.
So, talk a little bit about like the economy does here domestically, and certainly international seems to be slowing down significantly. If you're looking at, I'm looking at home prices. I have some people in the that watch this. I'll name drop Melody Wright is one of the people I talked to and have had her on. I'm not sure if you're familiar with her, but she just says how it is becoming a bloodbath now in retail home sales or residential home sales here in the US. That looks like the start of a deflationary contraction, if you would. And even if you look at the economic numbers, do you see deflation before even more inflation, or do you just see,
Well,
yeah,
I think we could look, we're going to continue to see deflation in terms of gold, right? Gold is real money.
good answer. Go ahead.
And
Go ahead.
that's been going on. Look, the Dow Jones in 1999 was worth 45 ounces of gold at its
Mhm.
peak. Today it's worth 11. That's a 75% decline in 26 years. That's pretty big deflation, right?
Right.
But you wouldn't know it because in fiat dollars, the Dow has gone up fourfold, right?
Right.
But if you look at it in real terms, in real money, it's gone down a lot, and it's going to continue. And I think the same thing is going to happen for houses. I mean, housing prices have collapsed in terms of gold, right?
Hmm.
The a number of ounces of gold that you need to buy a house. I haven't done the math. Houses may be the cheapest they've ever been. You know,
Relative goal, right? Right. Right.
but when people used to buy homes in this country, they used to pay for them with gold. When we were on a
Hmm.
gold standard, you know, gold was how we bought houses. That's how they were priced.
Right.
So everything is going to get cheaper. But the problem is when you're in a fiat system where in theory they could just, rain money down, right? They could put as many zeros as they want on the bills.
Hmm.
They can make sure the prices go up,
Hmm. Got it.
even as the real value of whatever they're pricing goes down. So I don't think we're going to have deflation the way most people would think about it, where, stuff that costs, $100 today is going to cost me $90 tomorrow. No, it's going to cost you $200 tomorrow. But the problem
Right.
is those dollars are going to be worth a lot less. So, in terms of gold and silver, yes, whatever you want to buy, if you have gold or silver today and you want to buy something in a year or 2 years or 3 years or 5 years, you won't need as much of your gold. You won't have to get rid of as much as your gold to buy whatever it is that you need.
Got it. Talk a little bit about two things. Talk a little bit about the miners. And I'm saying this not as a boast or a brag, but I'm saying this as just a question of what to do because my portfolio is up significantly this year, although it was down significantly the previous year, I want to say. My question is, do you still see a lot of value in the miners? And where does one look for value? Is there any other sectors that you see value in the commodity space specifically?
Yeah, well, I think all of these miners are still cheap. Now, they're not as cheap as they were, clearly, right? If they've doubled or tripled.
Hmm.
But, you know, their earnings have also gone up. And in most cases, they've more than doubled or tripled. The earnings have gone up a lot more. Now, I always expected this to happen, right? But most
Hmm.
people on Wall Street did not. So, from the perspective of, let's say, your typical, firm that's looking at gold stocks today, right, versus the same analysts who looked at them a year or two ago, I
Hmm.
think that they would find the stocks are actually cheaper because they would not only look at the current earnings, but they would look at their projections of future earnings. And a couple of years ago, when gold was at 2000, not only were, did they not expect the gold price to go up, but most analysts thought it would be down at 1500 or 1200. So when they looked at a gold stock, they discounted the earnings, assuming that future earnings would be lower. So today, in this environment, I think a lot more analysts will at least assume a steady gold price, right? Now,
Hmm.
I would assume a rising gold price, but at least if they assume that, hey, $4,000 gold is the price, we're not going to mark it down to 2000 in a couple of years. We're just going to assume it stays here, right? I think that most analysts who look at the sector are going to find more value in gold stocks today than they did a year or two ago, right? Based on their outlook for earnings and the current earnings, how much these companies are earning right now. So I think there's still value. One of the best values, though, I think might be is the real junior miners, because they have barely moved this year. It's the big companies and the mid-cap companies, the ones that are in the GDX and the GDXJ, but the ones that are too small to really be included, they've barely moved. And a great way to get exposure to those is through my gold fund, the Euro Pacific Gold Fund, because we've got about a 30% allocation to those. Now, if you're not in gold stocks, you certainly don't want to go all in on the juniors, right? Because they're the riskiest part of the whole mining sector. But you want to have some exposure there, especially now, considering how cheap they still are. I think the bigger players, they're still going to move up a lot. I don't think they're expensive. I don't even think they're close to being expensive. I mean, I thought they were rock bottom, dirt cheap, at the end of last year, the beginning of this year, because they all sold off when Trump won. They went down, even though gold never went down. Gold was at 3,000, and these stocks were trading as if it wasn't even 2,000. And even before they sold off, they were cheap, and they just got even cheaper. But you still want to buy those stocks, but you want to have, the smaller ones too. And so we had a great portfolio. My fund symbol, if you have a discount brokerage account, because we have a no load version, which most people who work on their own would want to buy. And it's EPGIX, Euro Pacific Gold Fund, EPGIX. Or you can go to my website at Europac.com. People can buy it directly off my site, or they can talk to the representatives. And if you don't like funds, if you want to have a separately managed account, we manage portfolios that are gold stock portfolios, as well as we also manage more broader based portfolios of, dividend paying, defensive type stocks. Gold stocks are, it's one type of portfolio that we run.
Excellent. So I think we'll end on that. If people do want, you just said it, but just say it again. If people want to if they're curious about doing business with you, buying gold from you, or having a portfolio managed, say that again. How do people come in?
Yeah, Europac.com is the website for asset management. They can also get a prospectus on my funds. As I said, you could buy the funds anywhere. EPGIX for the gold fund in particular. My dividend payer fund, which is EPDIX. That fund is up almost 50% on the year. That just shows you the type of returns that we're getting now on international stocks. These are mostly defensive stocks that pay good dividends. But also, everybody should have physical gold or silver. If you don't have any, that's the first thing on your checklist. Just get it done. Get it done today, because the longer you wait, the more expensive it's going to be. So, go to SchiffGold and buy some gold. Yeah, you're going to pay over $4,000 an ounce. Can't help that. That's the price. But it's just going to be higher later. And that's because we're going to continue to debase our money. We're going to keep printing money. We have massive deficits as far as the eye can see, made bigger by the big, beautiful bill. Trump is going to be taking over the Federal Reserve and packing it with his cronies. The goal is to artificially lower interest rates by creating more inflation, right, to try to prop up asset prices. That's the whole Trump agenda, is inflation and blow more air into the bubble. So the gold has no place to go but up. Silver has no place to go but up. So the sooner you buy it, the less you're going to pay. So go to SchiffGold.com and buy yourself some gold. It's $41.50. You can buy silver. It's still under $52. Silver, I think silver is $100 next year. And $100 isn't the top.
Wow.
That's just where I think it's going to go next year. But it could go a lot higher next year. But ultimately, sure, silver is going to be $200. It's going to probably be $500 one day. But I don't know how many years it's going to take to get to 500, but it's going there.
Right. Yep. And to all of my viewers and listeners, I told Peter a story several years. I don't know if it was 06 or 07, Peter, but I called him on the phone, and Europac on the phone, Euro Pacific Asset Manager on the phone. I got through to Peter. We had a 15-minute conversation, and Peter's been right since 2000, at least since I talked to him, since what, 2006 or seven. So,
Yeah.
anyway, fun story. Well, Peter, I want to thank you so much for your time. Love to have you on again. And yeah, just want to say thank you to you. I'm very grateful.
Oh, my pleasure. And keep up the good work.
Thank you.